Most people think investing only works if you have a lot of money. They believe small amounts don't matter. But this belief is exactly what keeps people stuck financially. The truth is, investing small amounts consistently is one of the most powerful financial strategies available to ordinary people. Consistency beats size every single time. When you invest small amounts regularly, you remove pressure. You stop waiting for the right moment. You stop trying to predict the market. Instead of guessing, you build a habit, and habits are what create long-term results. The biggest advantage of investing small amounts is psychological. When the amount feels manageable, you're more likely to stick with it. Missing a month doesn't feel catastrophic. Market drops don't feel terrifying. You stay calm, and calm investors win. Another powerful benefit is that consistency protects you from bad timing. When you invest the same amount every week or month, sometimes you buy when prices are high, sometimes when they're low. Over time, the average cost balances out. This strategy quietly reduces risk without you doing anything complicated. Many people delay investing because they think saving comes first. Saving is important, but saving alone isn't enough. Cash sitting still slowly loses value. Even small investments help your money keep up with rising costs. You don't need to invest everything, you just need to start. Modern investing makes this easier than ever. You can start with very small amounts. You don't need thousands of dollars. Fractional investing allows you to own pieces of large companies or funds without buying full shares. This removes the biggest mental barrier beginners face. Consistency also builds confidence. The first few months feel slow. You don't see dramatic growth. But over time, watching your investments grow, even slowly, changes how you think about money. You stop seeing investing as something risky and start seeing it as normal. One of the biggest mistakes people make is stopping when markets go down. But downturns are when consistent investing becomes most powerful. When prices drop, your regular investment buys more. This is how long-term wealth is built, quietly, not during hype phases. Consistency also forces discipline. When investing becomes part of your routine, it stops being emotional. You don't rely on motivation, you rely on systems. Automatic investments are especially powerful because they happen whether you feel confident or scared. Another important part of consistency is patience. Small amounts don't change your life in months, they change your life in years. Compounding needs time. The earlier you start, the less you need to invest. Time does the heavy lifting. Your income level doesn't define your success, your behavior does. Many high earners struggle financially because they invest irregularly or emotionally. Many average earners build wealth because they invest consistently. Small investments also grow alongside your life. As your income increases, your investment amount can increase naturally. You don't need to start big, you grow into it. The goal isn't to invest perfectly, it's to invest continuously. Missing a month isn't failure, quitting completely is. Consistency creates momentum. Momentum creates confidence. Confidence creates growth. And years from now, you won't remember the exact amount you started with. You'll remember that you started at all. That single decision to invest small amounts consistently is often the difference between people who worry about money forever and people who slowly grow out of that stress.